Hi, everyone. Welcome to the Timing Research Show for October 24th, 2016. My name is David Kosmeter. I'm the creator of Timing Research, and this is the 109th episode, and we will be talking about the 161st weekly report from Timing Research. If you haven't had a chance to take a look at this yet, just go to TimingResearch.com/reports, and you can download this or any of the past reports there. I have Matt back to host today, so I'm going to go ahead and turn it over to him.
Thanks, David. Welcome aboard, folks. My name is Matthew Buckley. My call sign is Whiz, and I'm the founder and CEO of Top Gun Options based down here in South Florida. We have a great roundtable set up for today. David always does a great job of finding some 500-pound heads in the industry to provide us some good fodder for the week, because it is going to be an interesting week, especially starting out with Merger Monday and the markets faded dead. I tried to sell a bear call spread immediately as this thing popped, because it's not going to be continued, and now it's already sold off. So, which kind of sucks. So I know I have a lot of my weekly options subscribers in here. If you got in that trade, great. But let me introduce you to our panel that's going to be talking today. Kirt Christensen of TradingScience.com, Dave Aquino of ValueCharts.com, and Anka's back as usual. Anka, good to work with you again. Anka Metcalf of TradeOutLoud.com, and I think she's going to be actually joining us down here in South Florida in God's country. And I don't believe Glenn has checked in yet, but let's keep that same order today, folks. Kirt, Dave, and Anka. Whenever I ask a question, you guys can respond. If you hear anything today that you like or dislike or anything like that, you can always jump in. And it's a free-flowing conversation, so all the listeners can hear what we're saying. So, Kirt, why don't you give us that executive summary of who you are, what you do at TradingScience.com, as well as your background before you got to Trading Science.
Yeah, sure. Well, I've been in the markets for about 20 years, since I was a senior in college. So, been through the ups and downs of all kinds of crazy stuff, obviously, that's happened in that time period. But my how I got into this stuff was I've always been an internet entrepreneur. So I was in the original internet tech boom, and kind of, got lucky in my first company there, and we made some good cash and sold that off back in 1998. And since then, I've kind of wanted to do my own thing in terms of entrepreneurship. So I've always had internet-based businesses. And then, obviously in an internet-based business, you generate cash, and then everybody, the conventional wisdom tells you, well, turn your money over to a financial advisor. And, we know how that goes. And so never really had the problem with making the money, but every time I turned it over to, the financial world, all of a sudden, everybody else was getting decent gains every year in those bull markets. And I wasn't. So I decided, well, I've got to figure this out for myself. Nobody's more concerned about my money than me. So since then, so for about the past 10 or 15 years, I've been teaching the same strategies that I've developed for myself. So Trading Science is the company, and probably our most well-known product is the ETF Tipping Point.
Awesome, man. Welcome aboard. Good to work with you. I think you're right, too. As a matter of fact, you nailed it, because I think it was the Journal the other day, or over the weekend, whenever it was, had an article about the end of investing really with RIA folks, because you nailed it. Nobody, even if it's your brother-in-law who's your RIA, he doesn't care about your money more than you do. So people are moving more towards just ETFs instead of single stocks, and becoming their own RIA. So I couldn't agree more. Okay, Dave, how about yourself, man? Tell us a little bit about your background, and then how you ended up at Value Charts.
Will do, Matt. Thanks again for the opportunity. Well, for those of you that may not know me, I think this is the first opportunity I've had to speak to you guys. My name's Dave Aquino. I am the stocks and options specialist here at ValueCharts.com. We've actually kind of migrated over our website over to BasecampTrading.com, and I've been doing this in the markets for a long time. Actually, I graduated in 1995 from Vanderbilt University down in Nashville, and I was 23 years old, became a full general securities broker with Merrill Lynch, and moved up to Pennsylvania. Did that for about 5 years with Merrill Lynch, and then moved out towards Philadelphia. I joined the Vanguard Group's high net worth service, and after a couple of years of that, found myself in their ultra high net worth asset management services group, and my job was to take like the high end family business, ultra high net worth clients, and a lot of times they'd have highly appreciated stock, with the basis being very, very little. So what we would do was create strategies with options to generate cash flow on those things. So that was a lot of fun. Did that for about 12 years, and was always working on my personal trading on the side, and got into a discussion with ValueCharts.com. They needed a specialist in stocks and options, and I've been running my trading room for about 6+ years, and it allows me to interact with traders because I understand it from the earnings standpoint and the potential of especially a lot of income trades like what we've been doing recently. And but we find that when people can take control of their own trading, it not only is it a vehicle so they can earn money, but they can actually learn about how the markets move. And that's a big advantage, even if you're just doing individual stocks, ETFs, indexes, things like that. So we come at it from that standpoint. And the like I said, we've been trading a lot of credit spreads, income trades, things like that with my 11-hour options income strategy over the past 4 months, and been doing great because this market's been crazy. And I look forward to talking with and listening to more about what everybody else thinks also. So, but thank you.
You bet, man. Thanks, Dave. Anka, how about yourself? A little bit about your background and what you do with TradeOutLoud.com.
Hi, Matt. Hi, everybody. First of all, thank you for having me. And I couldn't agree more with Dave. This is a crazy market, and it has been a really crazy market, Okay, so for those of you that don't know me, I have been a professional independent trader focused on equities and futures for the last 13 years. I come from investment banking background. I'm also the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade and swing trade futures and stocks, obviously ETFs as well. I also run a managed accounts program, and I have been running this program since 2011. And I'm the designer of an institutional proprietary trading system that is based on price support resistance, correlated with specific price zones and specific trigger times. Also, I look at the market from the synchronicity point of view. I have a strict set of rules that enable me to be very selective in my trading. And also, I apply a 10-point scoring system to everything that I trade, so to streamline my trading. So that's pretty much it.
Awesome. Okay. And when are you moving down here, Anka?
I hope to be down there maybe end of November, beginning of December, and I'm looking forward to it. I see the pool that is behind you. Okay, so right now here in Detroit, they're about 45 degrees.
Oh my God!
Brutal.
Well, you'll make it down just in time with the rest of the snowbirds. So
yes,
looking forward to it. Okay, hey Glenn, I see that you jumped on. So Glenn Thompson of PacificTradingAcademy.com. Glenn, why don't you give us a little bit about your background and what you do at PTA? Are you on there, Glenn? You might be on mute. Maybe not.
Hey Glenn, we're not hearing anything from you. You might have to log out and log back in, or restart your computer even.
Okay. All right. Yeah, we'll just press. All right, Kirt. Let's get rolling, man. Question number one: what direction do you think the S&P 500 index will move from this coming Monday's open, obviously today, to Friday's close? What are you thinking? Higher or lower?
I think it's going lower.
Aha, lower. And well, we'll knock out a couple questions together so we can get to some more meat. So what's making, how confident are you of that, and what's making you say that? What reasons?
What's the choices on the confidence level? Is there, are we talking
100% to 0? Yes. Yeah.
I'd give it a solid 90%, I guess. We've been bearish on, so we track ETFs. So we've been bearish on the Dow sector, the DIA, the SPY and the Qs since back in September 2nd. And then we went bearish on September 2nd and then went bearish on the Qs on 10/14. So I think it's going to continue lower. You know, most of my stuff is all of my stuff is mechanical, but, you know, on some subjective basis, I don't really see any reason for things to go higher.
Mm-hmm. What's your catalyst for it to be going lower, though?
The catalyst for going lower is just based on, you know, we have a proprietary indicator called the ETF tipping point. So it's a mechanical system that swing trades these ETFs with a pretty high degree of confidence. And so just since all the way back since September 2nd, it's been bearish. And so we'll see this week, but you know, we only make switches on Friday because, you know, we swing trade this stuff. So I think it's going to go at least a percentage or two lower this week.
Wow. Okay. That's a big call, man.
Well, we'll see by Friday. I don't know. Who knows?
Well, exactly. But you got a high delta there. What was it? 80%, 90%?
Yeah, I'd say 90% lower.
All right, man. Dave, how about you, man? Higher or lower on Friday? And what's your confidence level? And also, what are you thinking about what's going to go on this week to drive your opinion?
Well, thanks, Matt. I'll actually take the opposite side of things. I actually think that the S&P 500 has a pretty good chance, maybe any like 2/3%, 66% chance of going higher. My thinking is based on the double bottom we've had over the past, say, month and a half, that this market is kind of primed. I use a lot of support and resistance levels, a lot of price action. It's hard to go out on a daily chart. I mean, just look at that chart since basically July. But I think we're at a place where above the eight-day exponential moving average. Today, we tried to break above the 50-day exponential moving average, and we're sitting at like 2140 in SPX. I think there's probably a 66% chance we're going to go up towards 2180, just on the basis of the momentum on the daily chart, but also the fact we've got a lot of positiveness in the markets. Now, this is a big week for earnings, and Thursday might be kind of the catalyst to kind of propel us higher because some of the major stocks, Apple, Google, Amazon, especially those last two, are breaking higher today, up more than almost 1.5%. So I think they're going to lead the markets higher. They have earnings. I think earnings are going to catch them and go higher. And so that's why I give it kind of a 2/3 versus 1/3.
So you're looking at so your prediction for the tech earnings.
Yeah.
Last week we had financials, which to be honest with you, they were hot and cold. Mom and pop, auto loans, home equity lines of credit, small business loans from Wells Fargo. Your bank sucked, but you got J.P. Morgan, Goldman Sachs, Morgan Stanley printing money, but mainly on trading. Trading around the Brexit and some other huge events. So they're printing money with that. So, and the market kind of, shrugged was a little bit happy. It wasn't,
that's kind of that's kind of the story of the past 4 months, though. I mean, you get like 2 steps forward, 2 steps back, and whatever combinations. I think with things kind of being neutral and it being earnings season, generally, if you look at the ones that beat versus the ones that meet expectation, there's always going to be more that beat. So in light with the lack of something negative, I think the market will just gradually push higher. Especially if we can close above the 50-day, that the 2180 is kind of the next level of resistance up there. So
yeah, it does. During my turn, I'll pull up the SP 500. I agree that those, for a while there, it looked like we were going to maybe, the 50 and the 200-day are kind of magnets.
Yep.
You're either going to go down to the 200-day, but that would have been a massive move. And there's just nothing that bad out there, quote unquote. We can all say, hey, the economy sucks, everything sucks, but you got to trade the market you have, not the one you want.
Exactly.
So in the lieu of something horrific happening, that magnet's going to be that 50-day. So I agree. That's good stuff. Okay. Anka, how about yourself? What are you looking at, higher or lower by Friday? And what are some of the catalysts and how confident are you?
I'm on Team David. I'm very bullish on this market. We are in an overall very, very bullish trend. Higher time frames suggest that definitely we're not giving up. And like Dave said earlier, we are sitting on tons of support here, and we have been since November 9th. So we had pretty much a triple top right into the SPX. And I think the line in the sand is going to be 2116. And if we break 2116, yes, like you said, that 200 moving average is going to attract price lower right into the 2072 area. But today we are bullish. We are trading above a smaller range over 2150, and that's positive. And also we are breaking above the 20 period moving average, which creates a little bit of momentum. So far we're pulling in, but every single time the market proves that it's kind of waking up after 1:30, after 2 o'clock, and even if we're having a down day, it pushes and it rallies towards the end of the day. So it's full of surprises. I totally agree. This is going to be a great week for earnings, and like Dave mentioned earlier, we have we have Google, we have Apple, we have a lot of stocks that are reporting on Thursday, and I think this is going to be the catalyst behind the move. They're already moving higher, and we have a lot of NASDAQ stocks that are moving higher and they're powering up. Nonetheless, NASDAQ is really, really strong. The Qs are very, very strong, and I think they're trying to push they're trying to drag the SPX and basically the Dow along with them. And in terms of percentage, I think 80%, I'm confident that about 80% that the market is going to continue higher. Once we see a trade, and I think that if we hold this 2150 level, we can hover a little bit below or a little bit above, but if we hold this level all the way into 2175, and I think that this is going to be my estimate for the week, to see the SPX into 2170, 2175. This is going to be my target for the week. And I think that if we break that level, that's going to unleash more buying power, and it's going to bring risk back on, and we're going to go higher into 2193 and maybe 2200. So this is my bias.
Okay, awesome, Anka. I agree with a lot of that. Hey, Glenn, did you get on board, man? I see you down there. Don't know if maybe your mic's not working, but Glenn Thompson's supposed to be joining us from Pacific Trading. Didn't get a chance to get on, but we'll go ahead and press, and hopefully if Glenn pops up, we can still talk to him. I want to do a couple other things today. So, well, first of all, let me give you my 2 cents for what it's worth. I was going to skip me, and that was stupid. I believe. I know obviously we cannot close at the exact open that we had on Monday. It's physically impossible. If anything, I'm going to say slightly higher, and I'm going to say that's an 80 delta. So I'm relatively confident, but last week we, in our weekly options live trading session, I legged into an iron condor last week on the SPX. Love trading SPX, always trade SPX, never trade SPY for the tax treatment. But if anything, like Anka said and a couple other folks, we get pulled up to this 50-day moving average. It's very, very technically significant. Until the computers become self-aware and kill all of us, they're still programmed by us, which means that they are aware of moving averages. And a move through or up to the 50-day, it might be a ceiling for a second. If there's any power through that, it's very bullish. So until this election is over, I don't think there's any massive rally. I think it kind of looks like this boring, climb we did here after the Brexit. It was still up. There was no catalyst to drive us down, like the Fed meeting here or the Brexit here. There's just nothing on my radar that I can see that is going to push us monstrously down, like I think you said, Kirt. So I'm a little bullish for the week. I tried to get into an S&P 500 bear call spread that's run away from me. Initially, I put it in at $1.30 at about 11:37. You can see right there for $1.30, the 21.65, 21.70. Just because any of these Mondays where we have a big pop right out of the gate, merger Monday, turnaround Tuesday, all that type of stuff. I usually see a big pop Monday followed by a little follow through Tuesday, a level off Wednesday, a little down Thursday, and then slide into Friday. But again, like was mentioned earlier, the tech earnings towards the end of the week, they could be blowout. I don't think Apple's going to necessarily be a blowout. Now their phones are catching on fire too. So, if tech earnings are a blowout, I think we do go higher and we go through that 50-day moving average. And there's no reason to think in that last quarter they didn't print money or do as expected. Facebook, all those guys. So that's why I'm a little politician-ish here with but 0.8 delta to slightly to the upside. I don't think, I've been telling my traders at Top Gun Options, the only thing that's going to bring this, there's two things that are going to bring this market down, period. Oil, like we did in December, January. If we have one of those oil, holy crap, it's a $29 moment, this market gets cut in half. The other moment is a lack of confidence in central bankers, meaning the day the hopium that we're smoking from the Fed, we kind of, it gives us a hangover. We're done for. So, and I think these rates are being artificially kept low for political reasons, but we can talk about that over a beer. So that's my 2 cents for the week, is slightly higher with about a 0.8 delta. So that's my 2 cents. All right. What I wanted to do was a couple things. Go a little off script here, because I think everybody in this room right now that's listening to us has the same question I'm about to ask you guys. So Kirt, I'll kick it off with you. And it's so funny because, I'll keep my politics myself, but you can probably figure them out when I answer this question. Because I'm sick of hearing the words conventional wisdom, especially on Comedy Central. I call CNBC Comedy Central. What conventional wisdom aside, I want to hear your brain, Kirt. What is going to happen to this election if one or the other wins? Because I'm sick of being told what is going to happen. What do you think is going to happen to the market, and how can you potentially prepare yourself to profit off of it?
Well, I think one thing that's going to happen is the volatility's got to increase. I mean, things are waiting around for something to happen, like you were mentioning, right? I mean, your prediction is kind of trading sideways, but as we lead up to the election, I can't see any way that volatility doesn't increase, which obviously if you're an option trader is a good thing, because volatility is a great thing to trade. So I think people should watch out for that, regardless of what kind of positions you're in. Figure out some way to trade based on the volatility of the elections that will, I feel, no matter the result. I mean, it looks like the results are pretty much in the bag for one party, but something will come out, something will be released or something to that effect. And those kind of things are always factored into volatility. So,
well, that's what's funny is these, you see some polls have her 11 points ahead and others have Trump ahead. So, I mean, who do we even believe anymore? Who was it? The college professor whose model has been right since 1912 is saying Trump wins with an 87% probability. So it's one of those, are we going to have a Dewey defeats Truman moment? And if we do, what happens to the market?
Now, that's the one you're referring to is the one based on money put down, wagers, correct? Or is that a different one? No,
it's a college guy. I don't know what the background of it is, but I keep seeing his poll popping up every once in a while where people are like, this guy's predicted. There's no other poll in the United States of America that has been this accurate other than this college. I forget whatever college he's at. He's some professor, and it doesn't look like he's swinging to the right, by the way. I mean, it looks like he's actually being an honest guy. So what do we do? How do we react after? I mean, that's the vexing question with a lot of folks, is how to trade this event. It's almost like a Brexit event.
Right. I mean, and I think it's going to be almost identical to the Brexit sort of thing in terms of all of a sudden people go, everybody's heard about the election. I mean, nobody in America has not heard of the 2016 presidential election, but a lot of people are on the fence in terms of, beliefs of what's going to happen. I think there's going to be an oh crap moment for whoever wins, right? And so enough people have an oh crap moment, volatility shoots up, and regardless if it's bullish or bearish at that time with the election, I think that you can profit from some of those volatility trades.
Yeah, I agree. I'm as an options trader. I love it. I mean,
yeah. Oh yeah.
It's like you said, volatility. I tell my traders, volatility sounds like such a, hey, we're all really smart people because we can say the word volatility. Just think uncertainty.
Yeah.
Going into the Brexit, everybody's like, nah, they're not leaving. I mean, they'd be stupid to do that. And they left. So we did some bullish, I'll show a trade later.
Yeah.
I did bullish double verticals on VXX going in at the last Fed meeting. We did a bullish double vertical. The December Fed meeting, we're going to do a bullish double vertical. And then you get out of it right before the balloon pops of uncertainty, and you do a bearish double vertical. So that's why I love being an options trader. You could potentially make money up, down, or sideways in this market, just around what you said, the uncertainty.
I mean, it's like when you go watch a scary movie. Is the movie scary the entire time? No, there's only a couple moments in the movie where it's scary, where it's extremely scary, right?
Good point.
It's tense the rest of the time, but in general, people are moving around, people are eating their popcorn and whatever, but it's at the very tense moments when, in the terms of the markets, that's volatility, right?
Correct.
That's when, but if you've ever been to a scary movie, that it's not going to last forever, right? It's only going to last a couple of minutes. And so obviously, this as an options trader, well, why don't we bank on the predictability of volatility collapse? So.
Exactly. Yeah, that's great. Dave, how about yourself? What's your conventional wisdom, quote unquote, about the election? And is it what can you do to potentially profit off of the election?
Matt, I appreciate you asking this question because this comes up almost 2-3 times a week. Because it's first and foremost on everybody's mind. It's right there. Anytime you turn on the TV, you can pick your channel. That's probably what it's going to be about. But now things are shifting because there's this expectation that one party is going to win. So we have to, and I always tell this to my trading room, we kind of have to trade what's in front of us, but always be aware of what may happen. And let's just say the conventional, or like you said, conventional wisdom, but based on the overwhelming number of polls that show that that Clinton is ahead, then the market expects that party to win. So in my personal experience as a trader, is the market will continue to act in a way, in this case, kind of be bullish, kind of have an understanding that who the winner is going to be, unless there's big surprise. The market does not like surprises. It can handle good news and bad news as it's perceived, as long as it was expected. So right now, the Clinton side basically is kind of ordained as the Wall Street candidate. And I think that what will happen after the election, if she's elected, is that now something that was a possible unknown is known. So once that happens, it kind of removes the top, the fact that people are holding back because they're not 100% positive what the outcome is, that I think the top will come off the market. And then I don't necessarily think you're going to see a 3% day on the day after the election if she does get elected, but I think you're going to have room to expand to the upside, maybe even revisit the highs or even break above the highs of this year. If it's the opposite and the kind of the Brexit vote happens and Trump gets elected, you watch for a strong, sharp pullback. But I don't necessarily think it's going to be something that persists. I think it's going to be
correct.
A 1 to 2 day, maybe a week's worth of move lower, and you could do that with handle that like how you were trading it with VXX or UVXY, but not necessarily have an open-ended kind of hedge, maybe within a particular range to the downside or an expansion of UVXY, something like that. But I think in general, that if things occur like they do and we get through this event, then I think the markets has a kind of an open ticket to move higher. So I would be bullish, but you may want to step in there with a little bit of a hedge like the day before, you know.
Dave, I think you nailed it. Especially with the short-term memory that the market has. You know, the market has the attention span of a news anchor and a tsetse fly. It's just,
Yeah.
I was actually wrong about the Brexit, because when the Brexit slammed the markets, I'm like, guys, we're not even going to be saying the word Brexit in a week. It never even happened. I was wrong. It took 3 days. It took about 3 days before the market's like, what? And then just blew higher.
Right back up.
Yeah, it was this Y2K fear that the media threw at us, that, you know, planes are going to fall out of the sky and trains are going to flip off the tracks if England leaves. It was the dumbest thing ever, and we got fooled into it. So I agree. It might be, you know, it gets slammed for 2 or 3 days, but like you said, somewhere in my mind, Donald Trump lives in New York. Okay, check. And he's also a real estate guy, and he's a businessman.
Yep.
Who would the market want more? You know, 4 more years of, you know, whether it's Obamacare or just oppressive regulation or the financial regulation, or would they want somebody like that? So it's that's why I say I have to get you know, a bucket out every time I hear quote the conventional wisdom. I'm like, you're not the boss of me. I know what would be better than what you're telling me. So click, and off goes the TV. So, all right, Anka, you're up. What do you think is going to happen? What's your conventional wisdom, and how do you think you can trade it successfully?
Okay, so I think that the market has a favorite, and it's definitely Hillary, because every single time when she's leading in the polls, the market, especially after a debate, the market went a little higher or popped a little higher. So I think the market pretty much has its favorite, but I don't think that this is going to be the case going into election. And I think that regardless of who's going to win the election, there's going to be that there's going to be that. I'm not necessarily, saying panic, but I'm expecting a pullback regardless of who's winning the election, because you don't know what's going to happen until you have a result. So I think that's going to be a pretty, that's going to be probably another pullback, or it's going to be another range in the market for a couple of days up to a couple of weeks. And I think what's important for us as day traders and swing traders, and even for, a little bit of active investors, they're willing to hold stocks for, a month or so. I think we need to trade what is in play, and we need to trade one day at a time, and, just kind of like not choke the trades, but kind of like take whatever we can out of those trades in that particular time. So around November, usually we're getting, and this is a very atypical, it's not your typical, I was going to say election year, because usually election years, if you go back, you're going to see that they're trending years. So it's usually super, super easy to swing trade. These are swing trading years. And this year has been choppy, has been very, very difficult from the swing trading standpoint. I mean, I'm speaking for myself. It's like you're up and you're down, and then you're up, and then you're like in 5 or 6 trades, and then 3 of them are moving. The others are moving higher, and then 3 are moving lower. And those 3 were actually setting up better than the others. So, and then again, we have some surprises, like, and some stocks, like you have good earnings, and then boom, you have some rumors or some news coming out, and then they slam them down. I mean, it's just the same company, it's solid, it's good. And I'm talking about ABT, I'm talking about Johnson & Johnson, and these are good companies. Anyways, long story short, there's one thing that is happening, and not a lot of traders are talking about it, and I've kind of capitalized on this during last election, and those are cannabis stocks. And I know I'm opening a can of worms here, but the
That's
volume
awesome.
is increasing. Okay.
Well done.
So I'm actually in some of these stocks. I'm actually in 6 or 7 of these stocks, and there's a great amount of volume coming in. And these stocks, these are not like, you get them. I mean, like you buy them and you hold them. These are just election stocks, and before elections, you buy them, and as soon as they're into a reversal pattern, you dump them. So because they're not gonna have they're not really gonna have a really good price action for another 3 years or so. So this is something that you buy at the bottom, or you look for a technical pattern on the daily chart or the hourly chart, get in. and kind of like go with that. So anyway, so this is my thought about election.
That's interesting. Anka, I had not thought about that. You know, cannabis stocks into an election. That is a interesting strategy.
And I'm in stocks like PHOT, ERBB, EAPH, HEMP that are huge movers.
Hemp. Oh my God. Who grabbed that stock ticker first? That guy's smart.
Oh my gosh, yes. And I feel, and I've had them for quite some time, and I was reluctant on getting more at the very bottom because obviously in these stocks 00 is the stop loss.
Exactly. Can't get any lower than that.
No.
Oh my gosh. All right. So Glenn, did you make it on? I still see Glenn popping up down there, Pacific Trading, but I guess not.
Yeah, he's logged in and he's logged out a few times, but yeah, I'm not hearing anything from him either.
Okay, no worries. So you know, I agree with everybody in a lot of areas, and now I really agree with Anka. So we got to have a drink together, man. If you're long hemp. They got to legalize it here in Florida, first of all. Just, you know, it's not legal yet. But anyway, my take is this, and I don't believe any of the polls. Look at the Brexit polls. I mean, the Brexit polls had them staying in, and they left and shocked everybody. So I'm trying my best not to listen to the polls because there are a lot of voters who, even if they're polled, aren't telling the truth necessarily who they're voting for. Some of these polls, when you actually read the fine details, well, we surveyed 92% Democrats and 2 independents and a Republican. It's like, okay, that's a valid poll. So obviously the conventional wisdom is Clinton wins, market's fine because it's, you know, a continuation of Obama, which that even coming out of my mouth makes me want to put a bullet in my head. But then the market's fine. Regardless, it doesn't matter. I'll show you a trade here in a couple minutes that I have on and I'd put on today going into the election, and then I'd roll inverted just before the election. I mean, on election day, literally, I'd be getting out of this trade because that might be the peak of the volatility. Because when you're trading vol, it's better to be early than late. If you're late, it's like me sitting here in South Florida when Hurricane Matthew came through. That's not the time to go run down to the corner hurricane insurance store and get insurance. I mean, they'll probably sell it to you, but you're paying a hell of a lot more money. It's the same thing with the VIX or volatility. And you want to get out before the event actually kind of happens, or at the peak of the event, because if you're too late, like was discussed earlier, you get that vol crush, and you'll be chasing it and trying to get out of a trade, and it's not going to work. I think of my dad, God rest his soul, at that, because remember one time he's like, hey, can you take me to the airport tomorrow at 1? I'm like, Dad, your flight's not until 9. He's like, I don't care. I'll sit there with my book and be happy and read. I said, well, that's stupid. He's like, no, you see, I'm not that important enough for them to bring the jet back if I'm 1 minute late. So if you're late trying to get out of a vol trade, it's not going to work. Like I said, I think if Trump wins, we do have that 3-day oh my God, uncertainty tantrum. But what the hell is he going to do? Install, ultra liberal progressive into his government with all their, liberal, anti-Wall Street policies? No, the guy works there. He works down the street from Wall Street. That's what I really, but I think all of that's going to happen because it's ingrained, like you said, Anka, that, it's kind of ingrained in our minds now that this is supposed to happen if this happens. I got taken out of an XLE trade a couple weeks. I've been trading XLE forever. Hey, they reached an agreement in Algeria on production cuts, and the XLE popped. I had a bear call spread on them. Like, that's a lie. There's no way that happened. Even if it happened, it's not happening. But it doesn't matter. Got took out of the trade, and then over the next 2-3 days, Iran's like, were we even there? Did we send some drunk guy to vote for us? We're not cutting. And then Libya, Iran, and Nigeria said, yeah, we're adding another 700,000 barrels a day into the pool here, by the way. Nice agreement, guys. So I put a repair trade on XLE and got some money back. But I don't know. Trading these events, I'm going to stick with volatility like everybody talked about. I'm actually going to show my trade here in a couple minutes. So, all right, guys, let's go to the top of the list.
Matt? Ooh,
Yeah, go ahead.
Oh, can you hear me?
You bet.
Oh, it's Glenn from Pacific Trading.
Glenn from
yeah,
PPA,
sorry.
man.
Yeah, I've been having, I don't know what it is. I've been having technical problems with my headset, and it just from your picture, it looks like I have a Logitech. So if you tell me logistically, should I just forego today's presentation, or
No,
you want me to?
No.
Okay, I'll come up to speed quick because I know the format. I'm expecting the market to move higher into the end of the week. And just can I give you a little context? I'm a technician, and I've been doing this for 30 plus years, but as a subset of the type of analysis that I do, I place a premium on what I call, and facetiously somewhat, the neglected dimension of market motion. That is the horizontal axis, time. A market's only going to do what it's going to do once its time has come. I didn't come up with that, but people like Gann in the early 1900s. So here's my going from the general to the specific, and this is a tricky week, but and I heard you guys saying earlier at the outset, a lot of complexity, a lot of confusion, and we're bringing in all the fundamental events that we think are going to impact the market at large. I have no idea who's going to win the election. Well, I might have some idea, but I'm not good enough. I've never been good enough at interpreting the fundamentals, so that's why I kind of shifted in integrating the technicals. Here's my thought. November 4, I've projected a time target for the market. My subsequent one is 11:30, November 30th. And then I've already projected out to December, get this, the day after Christmas, which Christmas this year happens to be on a Sunday. The market's not trading anyway. But 12/20, if I had projected the 25th, it would have been that I would have interpreted it as having meaning on the next day, the following Monday, the 26th. So 11/4, which is, what is that, 2 weeks from last Friday, whatever it is, it's November 4th is my next time point. So I'm not as certain as to, I expect that's going to correspond to a bottom in stock prices overall. And if I assume the initial rotation, 11:30 will be a top, and then we're going to go back down into the end of the year, and corresponding around the holiday season. But I think trying to move in terms of discerning and dissecting the chaos and trying to see some underlying order. The reason I see the confusion here, we're in a triangle move, what I call a fourth wave of a larger fifth wave, and it's from an Elliott perspective. I'm kind of invoking here, but everything on the I lost my top, but my immediate overhead resistance is 21. Can you hear me?
Yeah, we can. If you're trying to show your screen, we're not seeing it.
Okay, I had to restart my computer, so I don't have my screens up now. So I'll just have to. Yeah, sorry about this. 2152 is and I'm not sure where we're trading at the moment. I think we got up basis the December S&P before I lost my price quote. I think we had a high around 2149. And I think I heard Anka or somebody say that they thought, if we break through that area, 2170 area, 217 basis SPY or SPX, but whatever, 2152 is based on some Fibonacci numbers and calculations, I think is going to be where we're going to top out by the end of this week, basis the Christmas S&P. Then we're going to move down, and what I expect will be the final leg of a five-way triangle, A, B, C, D, E, into next Friday, or November 4th. And that's kind of my 2-week projection. So having said all that, my easy answer for the first query is, I think the market's going to be up by the end of the week coming into this Friday. I'd give it about a 70% probability expectation. I'm basing this on my taking in where, my wave count in conjunction with my time point, November 4. And given that we've got 9.5 trading days left till 11/4, I got to ask myself, what do I expect the potential most probable or plausible trajectories for price will be? I think as we're going to go up into this week, and we have kind of a symmetrical, even amount of time left over to form a bottom on by the end of next Friday, which is 11/4. Now, curiously, that's a few days before the election. The following, if we discounted the weekend, I think it's the following Tuesday is November 8, Election Day. Whatever happens politically, I think the market's going to seize it it's going to form that bottom more or less congruent with the market because of what everyone's been saying. We all agree the market hates uncertainty. So until we get the result, the market will it's that uncertainty. Is it going to be Hillary? And I do agree fundamentally the market has established, or we have ordained Clinton as the more certain entity. Even though the interesting irony this time around is you would think that Trump being the business person would be taking on the greater momentum. But because of his, I don't know, what do we say, personality quirks, the market, however you want to characterize it, I think this time around the market is more comfortable with, in spite of whatever, the Clinton presidency, and as such. So if there's any deviation from that, I think the market will form that bottom coming into 11.4. Whatever gives, I think it will rally into the end of the month, next month, and then when everything is iron out and all the variables are netted out and we get a net resolution of interpretation, I think we're going to be down into the end of the year. And for a lot of reasons, cyclically, the 6th year of every decade tends to be a bad year for equities. If you go back 100 years and you study, the 5th year is what we typically historically refer to as the year of ascension of stock prices. The 6th year and the 7th year of every 10-year window tends to be bad, and you get pressure on stocks in general. That's a broad macro view, but that's just my thought. Again, I'll give it a 70% confidence. If we hold 2152 is my immediate target, in the next few sessions, and then I see that coming in to some resistance, and then back down into the end of next 11.4, 2113 is the exact level that I've worked out.
Okay. So as you jumped on, we were wrapping up the big elephant in the room, which is the election, and you hit on it a little bit. I'm anti-conventional wisdom, and it drives me crazy when people tell me what to think. But how are you trading the election? Are you trading volatility going into it? Or are you being directional? How do you see I know you talked about November 4th, but what's your sense on the election? What are you doing around the election?
Yeah. It's a trick. It's tricky.
That says it all, doesn't it?
I'll probably, and by the way, I trade my own accounts. I'm primarily intraday trading the E-mini, and I do a lot of Forex in the evening when I have time. I also teach. My responsibility as a mentor and teacher at PTA, Pacific Trading, is coaching all everything from pure beginners to experts and everything in between. But in terms of my own strategies, probably kind of watching very closely, moment by moment, day by day, as we get closer into that time point of November 4. Again, on the precipice, a few days before the election, my strategy would just be to day trade this, intraday, the S&P, not holding overnight exposure on a longer term position trade, given the uncertainty that I carry. So I would be day trading cautiously, though. Yeah.
Okay, makes sense. All right, guys. Kirt, in the home stretch here, here's where I like to steal a trade. I want you to give us a juicy trade you're looking at for today, the week, out to 2019, if you want to. What's the best trade you have on right now, or you wanna put on for the folks that are listening?
All right. So I'm not sure if this is the best trade, obviously, but this is the freshest trade. Called by my ETF system. So, we're swing trading. So on the GLD, we've made 5, let's see, let me check how many trades on the GLD. Either 5 or 6 trades on the GLD, 1, 2, 3, 4, 5. So this is the sixth trade, and it's actually bullish, contrary to the popular sentiment on today's call, of course. But it was bullish as of last Friday. So, I don't know how long that trade will last. But currently using this strategy, buy and hold on the GLD, you'd be up 17% for the year. With the 5 switches that we did, you'd be up 34%. So may not be a high probability trade, but it's the freshest, as of, last Friday. So many of my members just put it on this morning when the market opened. So I'm going to stick with that GLD, bullish. And so of course, if you're trading the double ETFs, you'd buy the UGL, or you could buy calls on the GLD, or you could buy calls on the UGL, which is the double ETF.
Awesome. Okay. Let's move on to Dave. Give us a good one, man. What do you like?
All right, Matt. So just looking, let me make sure I turn my microphone back on. Yep, I'm good. I like to keep things kind of short term right now, just because of some of the volatility that we have in the markets. We've been doing really well with very short term credit spreads, things that, anywhere from 4 to 5 days until expiration. Usually we're looking at the 60-minute charts or support and resistance really close in. And what I like right now, I'm talking about in my trading room, a bullish put credit spread, a bullish vertical with puts. The short strike, we're selling it for credit, so short strike maybe around 21.25, maybe do it or maybe even 21.20, and do a $10 wide spread. Do a number of those. That way, even if the markets get stuck between the 50-day EMA and the 8-day EMA, kind of just like how it's been doing for the past several weeks, we can profit from the trade, and that we'll be looking for 40 or 50 cents on that, and just hold it to expiration. That's part of what we do in my 11-hour option strategy on an even shorter term basis. But I like the way the daily momentum is starting to build, and especially if we can close above the 50-day. That trade probably would be really easy to take into Friday's expiration, and just let it expire worthless. If you stay above the 50-day, that thing should expire worthless, no problem.
Mm-hmm.
Yeah.
Good. Sounds like a plan. Okay, Anka.
Okay, my favorite trade, actually I have two, but I'm going to share one with you guys. Okay, my favorite trade right here is Johnson & Johnson long, based on the daily chart, and I'm going to give you the parameters for that. So far, it has finally bottomed at 113, and I think we could use 113 for the stop. This trade I'm looking to hold probably for a couple of weeks, and the entry is over 114.20, and this would be a daily trigger for me at this point. And the stock is basing right now. It has bottomed on the 200 moving average into a prior area of support as well, and it's also sitting on a 38.2 Fibonacci level, and I think it's going to go higher. And the first target is going to be at 117. I'm going to look at 118, 120, and then if it should prove to continue higher overall, and it all depends on the market and how it pushes higher, but it might take Johnson & Johnson higher and if you're willing to hold it for more of a core position, active investor, look for the high into 126 by year end.
Like that. Sounds very, very good. And Glenn, how about yourself?
Sure. Two things come to mind immediately. Number one, I agree. I'm not sure who the caller, not Anka, I think the person before mentioned looking at long strategies in GLD. Curiously, I have a time point for the precious metal sector for today, 1024. I have been short in silver, the futures from 1782 from about 2 weeks ago. So I'd be looking currently to exit or tighten up. I'm pushing my stops down on that position, looking for an SAR, stop and reverse. The only caveat here is from an intermarket standpoint, if I'm, to be consistent, if I'm expecting stocks overall to drift higher into the week, I would expect pressure on the precious metal sector. So I'm going to watch that, but I'm looking in principle in a qualitative directional sense to go long in either silver or gold. And I think as a short-term play, that's a good trade, given my primarily, again, starting from the fact that I have an expected turning point right today. So given a margin of error, I usually give it 3 units of time, 3 days. I'll be looking to go long in the precious metals. I trade silver or SLV or GLD, etc. The other scenario, completely different, but all related. If we close above 98.79 today, or whenever, given a close above 98.79 area in the dollar index, I expect further appreciation in dollar values. I think from a price standpoint, we're in what I deem and esteem to be a fifth wave. Fifth waves tend to be truncated, but I still think there's further appreciation in the US dollar. If you don't like that, because I know it's sometimes illiquid, trade at 4x a pair like Euro USD, still further depreciation or pressure on Euro prices, or maybe dollar yen or whatever. One way there's a kind of a way to exploit what I expect will be a bidding up of dollar prices. So those are the two main ideas I like right now.
Awesome. All right, let me share my screen real quick. Little, not necessarily super longer term trade, but out to the election. I'm looking. I already have one of these on, but if I was to place a trade today, this would be it. I think the strikes are off by maybe 50 cents, but this is I use VXX as a good proxy for vol. A lot of people trade VIX wrong. First of all, you're not trading the VIX, you're trading futures on the VIX, and long 8-hour discussion, but not a lot of people get it. So VXX is a good proxy for vol short term, because eventually, technically, the VXX is going to go to zero over time. But with the uncertainty around the election, like I said, you want to be early rather than late. So this trade, it might look busy on your screen, ain't busy at all. First of all, look at the picture. If you're an options trader or any type of trader, you know what a P&L looks like. This is called a double vertical. So, a lot of people, if they, here's my strategic mindset on this trade. Going into the election, as we talked about earlier, I believe that volatility is going to increase, just like the Brexit, just like going into a Fed meeting, just like before a government shutdown. We put these on all the time, and I hate people who talk like this, but I'm going to do it, and I'll hate myself. We print money, folks. It's a near certainty that volatility is going to rise in front of this election or before the December Fed meeting. Will she or won't she? So if you think volatility is going to increase as an options trader, if you're new to options, you might just sit there and say, I'll buy calls on VXX, or I'll buy a bull call spread, and you'll make me want to, might make my skin cringe. Why would you first of all, it's a debit spread. The word debit is a bad word at Top Gun Options. Why would you do that when not only can you have somebody else pay for that call spread, you can get paid for the entire trade? How do you do that? Well, let's think about this. If you think something is going up, I think VXX is going up because volatility is going to increase. Yeah, okay. What do you also think it's not going to do? And usually after about 3 seconds, people look at me, I smell smoke, and a light bulb goes on. They're like, go down? Exactly. So if you don't think VXX is going to go down because you're already betting it's going to go up, why don't you put two trades on? You can put on a bull put spread. In this case, I'm looking at the 29.5 strikes out to November 11th. So it covers me through the election. That's a bull put spread, folks. And you know what that is? It's also called a credit spread. Aha. Now I'm going to take that credit and do what you were just going to do, which is buy a bull call spread. So this is called a bullish double vertical. And you should be smiling right now looking down here. I get a credit, folks. Why'd I do 130 contracts? Give me 30 seconds to tell you why. So let me go mid-market on this trade. I'm going to click Analyze, and the first place, this is the Options House platform. I helped build it when I was up in Chicago. When I click Analyze, the first place your eyes are going to go is to a sad face. And you're probably going to sit there and go, why? Max potential loss is $4,800. Well, Whiz, I didn't listen to you. I looked at max profit, $8,200. I want to do this trade. Don't. As a professional options trader or a fighter pilot or doctor, whatever, we always look at risk first. What is my max potential loss? And if I ain't happy with this, why would I ever look up here? It doesn't matter what this says if I'm not good with this. My portfolios at TGO, Top Gun Options, are based on $100,000 portfolios. And one of my rules of engagement, one of the ways that I fight in my squadron is I don't want to risk more than $5,000 on any one trade, 5% of my portfolio. Why? Why not? That's me. I've been doing it for 26 years. I'm comfortable with 5%. You could be 2.5%. You could be 10%. You could be whatever. You got to fly your own airplane. But I'm okay. It's below $5,000, so I'm obviously okay with this. But $8,200. Well, Whiz, using at the money volatility, those probabilities ain't too high. That tells you that the market is uncertain. This is awesome odds. And look at the break even. 54% probability. As long as we stay about above 29.87, we'd have to see some serious implosion. I mean, some great happy event happen before the election for this thing to tank. This is a great trade. I've put these on repeatedly throughout the years in front of uncertain events like we talked about earlier. If Jesus, Muhammad, Ganesh, and Buddha all come back to life before the election and the market has a rip your face off rally and this implodes, I lose money. But this is kind of it's kind of a good trade to have on going into something big and uncertain, a double vertical, and you get paid. So look, last thing I'll do is show you that, this is like somebody came into my, kitchen and sat down and said, hey, let me take care of your USAA auto, home, and life for the next couple months. That's great. Oops, preview. So I'm getting paid a credit of $1,700 to be hedged against a spike in volatility in front of the election. I think we all agreed here with some 500-pound heads that vol's going to go up, and that's the way I'm going to play it. So that's my free trade, or my good trade for the week. And like I said, it's always better to be early on those things than later. If it's too late, you're trying to grab the back of the airplane as it's going down the runway, and it usually doesn't work. So that's me, man. And we hit it almost right on the nose. I went a little verbose. So let me go around the room and thank everybody for being on the panel today. But Kirt, starting with you, man, why don't you let us know how everybody can get a hold of you or follow what you do at Trading Science, and we'll wrap up with Glenn.
Yeah, sure. Probably the easiest way is if people are interested in checking out I've got a 90-minute webinar. If you go to etftippingpoint.com/webinar2, and that's it. That's all you need to do.
Awesome. Write that down, folks, and definitely go check out Kirt and what he does at Trading Science. All right, Dave, how do we get a hold of you or subscribe or join with what you guys do?
Great, Matt. You can find me at basecamptrading.com and take a look at our new website. It describes a lot of the information about the way we teach trading, our trading rooms, things like that. If you want to give us a try, we have a 30-day trial for $7. You can go to basecamptrading.com/go. $7. It's a Starbucks coffee. You can hear me talk for 20 trading days and have a lot of fun. So appreciate the opportunity to join you guys today. Thanks.
You bet, man. Thanks for coming. Anka.
You can get a hold of me at info@tradeoutloud.com, and I also provide weekly trade alerts via my weekly swing trader newsletter. If you're interested to give it a go, shoot me an email, info@tradeoutloud.com, and I'll send you a free newsletter. And also, if you would like to subscribe, you can find more information on my website. It is tradeoutloud.com, and we also provide education for swing trading stocks and ETFs. So if you're interested on that, also visit my website, tradeoutloud.com/swing trading.
Awesome. Thanks, Anka. And look forward to seeing you down here. Glenn.
Thanks again, Matt, for the invite. Sorry, folks, for the technical problems I've had, but you can reach us and find out more about my programs. I've been, as I said earlier, working with Pacific Trading Academy. So you can go to the website, www.pacifictradingacademy.com, and find out about what I do and what some of my coworkers, other teachers. But essentially, to be very concise, I teach all manner of technicals, pure beginners, experts, swing trading, options, day trading, etc. So yeah, pacifictrading.com is the site. You can get more info. Thanks again, Matt, for the opportunity.
Yeah, you bet. Glad we got you on there, Glenn. And obviously, Matthew Buckley, you can head to TopGunOptions.com. Obviously, is our homepage there. If you want to check out what we do in our different tracks of our trading here, offensive, defensive, and our max afterburner package. The website is actually go.topgunoptions.com/getft, and the FT stands for full throttle. That's what this program is. It's live trading 4 days a week, from weekly options all the way to retirement portfolios. Everything's sent out via text alert immediately, and emails, and all sorts of good stuff. We're having a great time trading the markets here, especially with all the buffoonery going on in the markets. It's a great time to be an options trader, so we couldn't be happier. So go.topgunoptions.com/getft. And David, thanks for having me again, man. You had another good panel. Looks like folks got a lot of good information today, so I'll throw it back to you.
Yeah, thanks everyone. Great show. Just want to remind everyone watching that please hit the subscribe button for our YouTube channel, so you can get updates on future shows. Also, you can go to TimingResearch.com to download any of the past reports, or view the recordings of any of the past shows there. Be sure to join us next week. Rick Sadler is going to be on for the first time. Also, Adam Johnson, Neil Batho, Michael Filiguera, and Dave Landry will be back to host. So I just want to go down the list and thank everyone again for this week, all my guests. Kirt Christensen of TradingScience.com and Dave Aquino of ValueCharts.com. Thanks, guys, for being on for the first time this week. Anka Metcalf of TradeOutLoud.com. Len Thompson of PacificTradingAcademy.com. And, of course, Matt Buckley of Top Gun Options. Thanks for hosting again. Thanks, everyone.
Thanks, man.
Thank you. Thanks.